Here we go again, another 0.75% increase to the overnight rate by Bank of Canada this past Wednesday. What does this mean for you as a buyer, seller, and investor? And is this something that is going to keep going up and up and up, or does a stop to this madness? We'll discuss everything, all you need to know, every strategy that you could use in your favor, and more in this episode. So let's get going. So 0.75% increase. Obviously, this is not a good thing. Everybody's feeling the pinch and the pressure, whether you're a first-time home buyer, refinancing your home to purchase something else, you're already on variable rates, or you're a small business owner. Everybody's feeling this pain, and whether this is a continuous thing, I hope not. We're seeing another reassessment towards the end of October. I hope they really sit down now to take a look at the numbers as far as the unemployment rate goes and everything else, to see whether inflation is calming down, which seems to be doing so, and for us not to jump into another increase to impact the economy negatively, so that we're faced with a deflation. And that's the last thing we want to face and to deal with. Obviously, as far as the situation now goes, you are looking at first-time home buyers. Two different types of buyers. First-time home buyers that are, obviously they don't have that equity build-up. They need to be qualified based on the interest rates, as well as the stress testing and everything else. And then we have repeat buyers. And for first-time home buyers, it is much more difficult. As it was previously with the home price increases. Now they're dealing with qualification and higher interest rates. So nothing has happened to help those individuals in need for housing, really, by this. And I'm hoping they can see to this issue in the future, building 17,000 homes in the next God knows how many years by the federal government. Whether that's doable or not, that's beyond the issue here. And another thing is the whether you're a seller. Being a seller, if you need to purchase something, really, yes, it's not the best market to sell, but at the same time, because of the drop in prices, somewhere between the ballpark of 8 to 12% based on the location, then the ratio holds itself as it was before. This is with all consideration that you are qualified, and you do qualify with the fact that banks are really minimizing the risk in terms of lending. And I've gone through it personally as well with recent investments, so I really know firsthand that they are being cautious and really calculating and analyzing every applicant, and it is taking longer. Hence, you're seeing more homes going conditional now on the market, because banks are taking longer to process these applications. So that's very important to note as well. And if we do see a decline in inflation, as well as the Bank of Canada analyzing the numbers and everything else, I feel like the future or the months to come towards mid 2023, towards the end of 2023, we may see another movement where the variables will be more calm, or somewhat starting to reverse back and drop, as well as a better offers on fixed rates. Again, remains to be seen, but that's my take on it. And please do remember that we have a lot of immigration. These are basically business status individuals, people coming in with money. Builders at the same time, they're really pulling back their developments. And then we have domestically individuals, young individuals, families that are seeking housing. So we will face shortage of housing. We are facing shortage of housing. This is something that will not disappear, and I don't see the government being able to handle this in the coming years. And I feel like around 2024, 2025, we will see another significant increase in home prices. So those buyers right now, or sellers that are buying right now, willing to take on that risk, that pain of making these transactions, qualifying, dealing with these rates, will benefit in that period of time, where we'll see, I feel, another jump in prices. So that's that. So we'll get into the numbers, looking at the Ottawa in general, and we'll get specifically into each category more, looking at the numbers in the month of August 2022 for residential number of sales. 2022 we had 850 units, whereas it was 1,169 the previous year, and that's a drop of 27%. Negative 27% drop in the number of sales for the residential freeholds. And then looking at the average sales, was still higher than the previous year, month over month. So looking at 2022, 707, so 707,000 approximately, versus 674,000. So about still year over year, we're still 5% higher than the previous year, considering everything that is happening right now. And looking at the home days on the market, a home sits to sell, you're looking at for 2022 25 days, and 2021 18 days. So that's basically an increase of almost 40%, but not a significant change. Again, it goes back to the type of home, whether it needs work or not, the location, and those things are really important, and they will make an impact on the number of days the home takes to sell. So now let's take a look at each category specifically, looking at the residential freeholds, and look at these numbers. Very interesting. For the month of August, we had 1,563 listings, active listings on the market, and number of sold 593, very similar to the previous month. And again, you see all these homes sitting on the market. At the same time, we're seeing a decline in the number of new listings. So people are just pulling their homes out of the market. They rather wait unless you really have to sell to buy. So that ratio will hold itself if you're selling and buying at the same time. But otherwise, we will see a significant decline in the number of listings as well in the months to come. What remains to be seen is what the Bank of Canada is willing to do or deciding to do towards the end of the year. And year over year, looking at the stats here, the previous year, August, we had 863 active listings and 831 sold units. So it is somewhat of a seasonal movement, but the drastic difference between the active and sold listings are noticed here, of course. And looking at the residential freehold list versus sold ratio, we're at 96.8%. Obviously, as we mentioned before, how prices were going up, the average list price has dropped, and this is in ratio to that. And the previous year we were almost at asking, but the average sale price was higher. And looking at that, we're looking at the average sale price per month, and we have dropped. Look at that. We were at the peak of 911,000 around March, and now we're at about 750,000. And I repeat, for those buyers who purchased something in the past few months, you look at the long term, okay? If your end goal is about 5 to 7 years, this is just something that will drastically change during that period of time. Right around 2024, 25, we're gonna see another hike. So this is just what it is now. Don't feel disappointed or discouraged in any way. This is what the market is. If our home prices keep going up, we all feel good, and if it drops, it's like the doomsday. But in truth, you just have to be patient, and then the values will go up eventually. But these are the numbers that we're dealing with. And interestingly, the condo market is taking this better. Just because of the pressure that is being felt with the affordability for higher valued homes on average for residential detached, people are moving towards either renting or purchasing condominiums. So the condo market's taking this a bit better than the residential freeholds, and we'll take a look at that. So we're looking at 750,000 average for a month of August. and still higher than last year, which was 735,000 approximately. So moving on and taking a look at the residential days on the market, very similar to what was discussed before, 24 days for August of this year and 16 days. So again, not a drastic change as far as things go. And now looking at the condominium market, the list price versus sold price, and for August we had 627 active listings and 275 sold units, and previous year we had 526 active units and 368 sold units. So again, the gap is much more than what was felt in the past couple of months, but year over year with condominiums, you see the trend is really repeating itself. Okay. Looking at the list price versus sold price, we're at 97.2%, and also similar to residential detached homes, condominium averages also dropped as well. And whereas last year was 99.7% for this category. And looking at the average sale price per month for the month of August 2022, 429,000, and again much higher than previous year. But right now, even comparing it to the previous month for condominiums, between August and July, August average for condos is actually increasing, which reflects what I discussed a couple of minutes ago, and year over year still higher. Last year this time was $413,000, the average sold price. And looking at days on the market for the condominiums, 29 days for the month of August 2022 versus 22 days the previous year. Again, not a significant change as far as that goes, not so much of a concern, but again, it goes back to the sellers adjusting their expectations based on the market that we're faced with at the moment. And then looking at the rental market, and as expected, we're seeing this margin, the gap narrowing between the active listings and the rented units. And we're seeing it again in August 2022, 628 active listings and 612 rented units, whereas last year this time was 590 active units and 464 rented units. And I believe the overall average rent will continually increase because of the pressures we're feeling right now, and this is a new reality. And I'm faced with a lot of my rental properties. I'm faced with a lot of individuals or couples or families that are very qualified or were qualified a couple of months back, and now they're faced with renting homes. So that's that. And then looking at the days a unit sits on the market, you're looking at 21 days this August, and 22 days. So nothing has changed as far as the rental. So that's the thing. If you are buying a first time or a repeat buyer, you endure this pain, as we call the disqualification pain, or the interest rates for something that you will face, or a benefit that you will face and experience in the next 2 to 3 years, and for investors as well. You are, obviously it's much more difficult to borrow now, but you benefit 2 to 3 years from now. And even sellers will have to sell and to purchase something. Yes, you won't get the price that you want now, but at the same time you are benefiting from a lower average purchase price, and at the same time in a few years you will benefit. And I believe the last thing you want to do, unless you really are unable to afford it, is to wait off. Still, I mention and I say that if you do qualify, I still say you should go for it. Yes, it is much more uncertain now, it is much more difficult now, but if you're able to and you qualify, I would still go ahead and make that jump and make that move, because in the next couple of years, based on immigration, based on the reduction of new developments, and population growth, domestic need for housing, the signs aren't very positive, and I don't see 17,000 homes from the federal government helping, if they even manage to pull that off. So I would really think about that if you're in a position of purchasing and making that move, and you're like, I don't want to go through the trouble, I'm gonna go ahead and rent and so on. So that's my take on that, guys. If you have any questions at all, please feel free to reach out. I'm a text, phone call, email away, and I love to maybe meet up with you guys over a cup of coffee. Any questions you might have, I'd love to answer. And until next time, take care.